Okay, so we want to start. We are here. My name is Andres Alonso. I'm here with Andrew, and we want to present a new master's at IE University on financial technology. So basically, what we aim to do here is to convey the message that financial technology is an ever-changing landscape. We've both been working in the two big dimensions of financial technology. I'm more working on machine learning and AI, and Andrew is an expert on blockchain and digital regulation. So what we have been working on with IE University is to really develop something completely new, brand new, to focus on a long-term course on how to learn financial technology from the ground base. That's why we see financial technology like a two-dimension, let's say, landscape or field of research or academic field, where basically we aim to focus our effort on explaining that fintech is basically about two big technologies: AI, machine learning, generative AI, natural language processing, how to master this new technology together with, as we are here, blockchain, crypto, and DeFi smart contracts. So what we want to differentiate ourselves is, together with the backbone of IE University, to work from a very technological background on what are the basics for studying financial technology, that this is not something that can be done in a very fast course, 1 month or 6 months course on any of the particular topics, but we need to go back and to go to the to the roots of what is AI, what is machine learning, why in finance we are using this, what has this to do with econometrics, with statistics, what are the problems regarding responsible use of AI, sustainability, same with blockchain, and Andrew will focus more on blockchain and digital regulation before going into, the very fancy things of setting up a new startup or a new fintech that we will touch upon that. But we want to differentiate ourselves, saying that we know the basics and the academic, we have the academic background to really build something from scratch that will take a year long to really try to master what we understand is financial technology. As of today, what is financial technology? Most staff would, associate financial technology with one particular dimension of financial technology. Some of us like blockchain, some of us like, basically building up something from scratch and a startup in finance-related things. Some of us go more into other dimensions of technology, like AI, in the very general terms that I will touch upon this, refers to natural language processing, refers to how banks are using nowadays generative AI, but also how to deploy this in real practice. So basically, we want to see how to connect two worlds. First, like, general finance, like banking and financial institutions, how are using AI, like seriously using AI. So we are looking for profiles like people wanting to delve deeper into data science, computer science profiles that really have a good understanding of what are, the statistics behind these new technologies, what are the, they have the academic background to really understand the complexities of going into computer science subjects, but also people who are more into finance and they want to go back to understanding, I already know how finance works, how new market infrastructures work, but I don't have the understanding of how to program in Python. I don't know, what's behind the roots of blockchain. I want to program in blockchain, and they want to spend 1 year long going back to these roots. And this is exactly what we are going to do. So we start inside IE in the Science and Technology School. So this is not the business school, this is science and technology, because this is what is going to be the backbone of our professors and of our faculty. We are looking for people who are willing to spend some time with, first term, same subjects as in computer science, and then going into the second and third term, trying to specialize themselves, either more into the technological dimension of AI and banking, or blockchain, fintechs, and this new industry. And why AI is used in banking? There are several use cases. I don't want people just to stop in the surface. We can go into why really banks are using this. And from our experience, we are seeing AI used in very different use cases. We have some examples like credit risk and credit scoring. There are so many fintechs that basically are devoting their efforts to try to rely on new machine learning models, on new generative AI technologies to really understand how they can, gain new access to credit, or they really can manage in a newly fashioned financial risks. So we want to understand from people in banking how they are using AI, for example, in all the domains of financial risk. This means using traditional machine learning. This is going into interpretability techniques like game theory, supply values. This means understanding all the very basics of statistical inference and the roots of supervised and unsupervised machine learning. So again, think about one term that is going to be spent all the first term of the master's degree on computer science subjects. If you are more into trading or asset management, it's true that we have all this high frequency trading. That is also some kind of the profiles we are going to cover with some of the faculty specialized in in latency and how to use machine learning and AI and generative AI for trading, for causal inference, for example, and factor investing. So again, it's not that we are going to be a trader or we want only to get traders inside the master's degree, but you are going to be able at the end of the master's degree to understand how traders deal. What's the technology behind them? So then you will be able to specialize more in the infrastructure and really be like the technologies behind this kind of new trends in trading, or you can be more like a strategist and work with the more finance intuition of why these new technologies can prop up new strategies in trading. But it's more, we don't want to go only into the wave or the fancy things of setting up new things, risky things. We also, both of us come with a background from the public sector, so we want to put a lot of effort on supervision and regulation. So a lot will be said about supervision and regulation of financial markets, of new players, new products, and all the technology, how the technology is going to help also the auditors and the risk experts about how to supervise new fintechs or how to use new technologies to improve their work as of today with the financial risk that we are supervising. When we talk about AI, it's true to say that we live in the area of text as data. A lot of the usefulness of AI in banking is because we are getting into an area where say big data and the vast amount of data that we have is true, but what is usually said is more than 80% of the new data that we have is text. So we have to be super expert now how to retrieve data from text. And this is the big thing that we are now able to do with large language models and natural language processing and generative AI. And we want to understand how to combine text as data within the traditional econometrics and statistical techniques. How we can run some empirical analysis with traditional numerical values, categorical values, but together with extracting information from text. Just to put you as an example, how ESG and sustainability has really gained traction in banking is because banks have been able to extract all the information from PDFs, from text. This is one of the very first examples of how to combine new technologies for traditional and new banking innovation. So sustainable finance is very quantitative when you go into banking. Why? Because you need data scientists, you need computer scientists, you need people who are really good in these new technologies to really extract information that is strictly only in text. And this is happening in many other fields. So what we really want to put here is some good use cases, some good subjects that people will be able to deal with these technologies and at the very end of the course be able to apply them in different application domains. Customer service and all the, let's say, expertise using language to interact with the clients. It's, master or first go in banking nowadays. So everybody is building something on chatbots and the like. And again, we will talk about responsible use of AI, explainable AI, interpretability, and regulation. Because we don't want to surf a new wave. We want to be solvent and robust and spend our time both with the ground basics of technology and also with the new digital regulation that is coming up, that is super fast moving together with the same that is happening in the ecosystem. So we have new pieces of regulation every month, and this is going to be one of the big challenges of the master, how to keep up with this new regulation that is happening. Now on blockchain.
Great, thank you, Andres. And just check you can all hear me okay? Yeah, great. Yeah, exactly. So moving on from AI to blockchain, we do these things alphabetically. So at some point we'll end at the end of the alphabet. Obviously, blockchain. I think you'll hear. You must all very well know exactly the benefits, the potential benefits of blockchain for financial services. And why we find it an interesting topic and really core plank of the Masters in Financial Technology as a whole is what blockchain can do for financial markets and changing business models across financial markets. AI, as Andres has just explained, very much provides new tools, new ability to extract data and make the most of this data, whether to sell that as a product or to make your own services more efficient. Blockchain, I think, has a real ability to fundamentally alter the business models of finance as we understand it. If we think back to sort of traditional fintech, if you can call it that, from the financial crisis 2008, 2012, before blockchain, a lot of that was about unbundling traditional financial institutions and actors, be it banks, payment systems, payment services. Payments is obviously one of the large areas where it started. Well, blockchain allows that as a new technology, but in an even more efficient manner. So what we're seeing is the technology existing, which then allows companies to change their business model and thus outcompete either existing players or provide new services, new opportunities for inclusion, for more efficient or cheaper financial services, for better cross-border operability, and also for potentially more sustainable and certainly more durable financial services. So I think when thinking about blockchain in financial innovation and financial technology as a whole, there are two things here. One is what the technology allows as a shift in infrastructure, as a shift in technology for existing financial firms, for fintech firms, and for startups, obviously challengers. And then also, what people tend to think about when they instantly talk about crypto or blockchain, is there a new asset class? Whether that's a cryptocurrency, whether that's a stable coin, whether that's a CBDC or a tokenized real-world asset, RWA. So we've got these two different areas coming into financial markets, into financial services, from one single technology, DLT. And within that, of course, DLT is maybe, distributed ledger technology is maybe one form, one overall arching technology. But there are different forms of blockchains. There's permission, there's permissionless, public, private, and each one of these has a different implication. Each form of blockchain has a different implication for what services you can offer and on what basis, to what clients or to what users, for different areas. Not all blockchain is financial, but most of it that we see today is. And so really what we want to do in this course is bring in this idea that the technology is great on its own, but on its own that's not the whole story, is linking that to financial markets and saying, hey, well, what does the new technology allow in a financial market? As I say, partly it's efficiency, partly it's new products, but it's also new business models. And I think that's where the interesting thing really comes in. So here are just some very well-known use cases. Obviously, stablecoins. Why are they? I think everyone here is probably going to talk about stablecoins at some point. Why are they so interesting? Well, because they allow the merging of the crypto or blockchain-based financial system, new emerging financial system, with the traditional one through on-ramping fiat, on- and off-ramping fiat. So that's what creates the link. That's why it's a foundational technology for the sector. Tokenized real assets, in a sense similar. Obviously, they're taking real-world assets and putting it onto a chain. But then what does that mean? How would you structure that? This is the kind of thing which a lot of people, and here again, a lot of these exhibitors here will talk about the value you can extract from tokenizing real-world assets, the benefits of making things more fractional or efficient or more inclusive. But actually, what does it mean? And how do you structure this new technology? We've had securitization for a long time. We've had special purpose vehicles, SPVs, for a long time. What does tokenizing that mean? What does that imply, both for the customer, but also for the firm? Where does value sit? How does value move? And how does that change because of the technology? And related to both of these is then DeFi and smart contracts, which are relatively similar. What does it mean when you take out the intermediary? I would argue that the history of financial services is the history of intermediation. And now suddenly we've got a technology which can allow pretty much anyone in the world, even unsophisticated, non-professionals, to conduct very sophisticated financial transactions on a peer-to-peer basis. Now that has huge benefits. Again, it's more efficient. You get settlement finality, you get atomic settlement. You can get a complete reduction of counterparty risk by making sure that the transaction happens on both sides at the same time. But it also creates new risks, which are, operational. What if you don't know how to do it? It's also, what if you make a mistake and you send something to the wrong person? You get these really quite important frictions that exist in the traditional financial system to row back problems or mistakes or slow things down so you can do AML, anti-money laundering, and financial crime checks. That can be harder on blockchain when things are so instant. So there's a benefit, but there's also some challenges here as well. So that's why, as part of this, as a third leg for the course, we're adding in policy, or the public context, if you want to phrase it that way, very much as a core third pillar. You've got the technology. Of course, that's foundational to financial innovation. You need the technology. You then need the understanding of financial markets and how they're changing because of the technology. You also need to understand the policy context. Now, partly that's a simple compliance question. How do you comply? How do you make sure you comply? How do you conduct your anti-money laundering checks? But it's actually much, much more than that. What does the policy framework allow you to do? Banks are the most, or traditional banking is the most classic example of this. A bank is defined in law. Well, what happens if something comes along which can do everything a bank can do, but in a different way? Now, originally people said, well, then become a bank. And then people said, well, hang on, maybe this is more like e-money under the sort of e-money directive of the European system. Now we're looking at stable coins. Maybe we're separating out deposit taking or the storage of value from credit creation and the loaning out of value. So how does the regulatory framework allow that? Should it allow that? What are the risks? And so it's always come back to this first principle of what is the role of policy? What's the public sector's role in these markets? How do you then design the right regulation and policy framework to achieve the outcomes that the public sector decides it wants? And then, as an industry or as a founder, or as a technologist, how do you interact with this? How do you know what's happening? How do you make sure that you're complying? How do you make sure you're making the most of the opportunities that regulatory change allows? Now, I think PSD2, the payment service from about 10 years ago, a bit less in the EU, I would argue created the modern payments fintech landscape in the EU. And I think that's why it's much more dynamic than the US. So there are opportunities coming from regulatory change as well. It's not just a question of adding on compliance burdens, things like that. So as a whole, regulation, policy, it provides the framework of stability, so investors and companies know what the landscape will look like in 5 years' time. They can make projections, they can grow, they can develop these new services. It provides rules of the road, so existing financial institutions that want to use the new technology know how they can work together with these things, so it provides that certainty. I think a big theme of a lot of people here now is this mainstreaming of financial technology, financial innovation into the existing market system. Of course, there's the questions of consumer protection and financial stability, which are fundamental to everything. And then there's this other idea of what do we do with existing public infrastructure, so central bank accounts or payment systems like RTGS, Target 2 and things. How can we use these to support financial innovation, and what does financial innovation imply for these things? So to say, the course as a whole has 3 pillars: technology, financial markets, and policy, or the public context. So moving on in our last 5 minutes to talk about the Masters itself. Do you want to take over? Or?
Yes, the program format is 1 full year, full time. And basically we are looking for these kind of people who are into data science, who are into the statistics or computer science and have the curiosity in finance, or the other way around. People who have the curiosity into computer science, but didn't have time or didn't have the background enough to spend some time coding, but they want to go back into this route of how to deal with this field of expertise, and they have the knowledge of finance. Basically, this means that it's an interdisciplinary curriculum because we are going to touch upon AI, and we're going to touch things that are purely on financial markets and the history of financial markets and why we are coming today, and we are seeing here today Alastria or blockchains for instant payments, and we will touch also the traditional technologies, RTIS, and all the like, for you to know why we are here, where we need to innovate. And once we spend between term 1 and term 2 with all the qualification on the technology and the technological part, you will be able to specialize in different things, as we said before, where we see the expertise demand from this expertise today, both in innovation units in banking, where you have people devoting their work into, scaling payments and market infrastructures, creating new products, creating new markets, also AI, those kind of profiles who are more into data science and computer science, and they want to really apply this strictly to finance-related domains. And then we will do this by integrating the faculty of IE, so full-time professors, together with people from the industry, master classes, and the entrepreneurial mindset of IE with the Datatons, Tech Ventures, and also with the idea of potentially being able to, learn how to create a fintech from scratch. Either you want to go into the general industry or you want to create something by yourself, you will be able to do it, both things.
Yeah, so just to conclude, as we were saying, like the aim here is to create students or to help students develop across what we see as the 3 core platforms for a successful career in finance today. I think most people growing up, certainly myself, these things didn't exist. The technology didn't exist, and the need for these programs didn't exist. Well, now it does, and our contention is that you can only have a successful career in finance if you understand how innovation works in finance. And that means understanding the technology not as the sort of add-on something to talk about, but actually understanding what the coding looks like, what the programming looks like, how to do that yourself. Then, of course, you need to understand what's happening in financial markets, how are they developing, and then part of that is the regulatory framework, the policy framework, what's allowed, what will be allowed. So by teaching the students these three things, we think we're setting them up for a career in entrepreneurship, in fintech scale-ups, or even in an existing financial institution to be able to make the most of the new technology.
Okay. That's all from our side. Thank you very much.
With that, thank you very much.
Thank you.